Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott. I'm pleased today to welcome Sprott's Director of ETF Product Management, Jake White. Jake, thank you for joining me today on Sprott Radio.
Thank you for having me.
Well, Jake, before we get into the state of copper, lithium, and even potentially some other metals that you might be working on today, tell our listeners a bit about yourself and the general work you do kind of day in, day out at Sprott.
Absolutely. So as Director of ETF Product Management, I'm focused on product development within our ETF suite, product management, growing our assets, and provide a lot of support to the market in terms of our education. We also are proactively conducting a lot of investment analysis that goes into, should we create a product focusing on silver miners, gold, lithium, these sorts of things. And there's a lot of analysis about whether we should or should not do something. I think there's a lot of potential opportunity within a lot of these investments in critical materials and in precious metals. And so, sharing as much investment knowledge as we can has always been a good thing for our investors.
Let's say you identified lithium or you identified copper as an investment opportunity out there. Once you do that, once you identify that, how do you express that from kind of idea to investment? What does that look like? How do you build that?
Our differentiator has been primarily that we invent pure play products in collaboration with our index providers, predominantly NASDAQ. And what we mean by pure play is that a lot of our ETFs focus specifically on, like if it's a copper miners ETF, only copper miners that are exposed at least 50% of their business would be in copper. We're actually going through all of the miners pretty much in the world that mine copper and that are publicly traded and quantifying on a semi-annual basis what is their exposure to all of these different metals. There's a lot of movement and a lot of moving parts that go on in a lot of these companies. Sometimes there's mergers and acquisitions, and smaller companies, they may have different strategic focuses. They may shift their focus. So we're constantly making sure our products are up to date and aligned with their investment strategies and providing the purest play exposure to these critical materials and precious metals.
Use that word pure play, and you think about some of the great investors out there, and one of the things many of them agree on is concentration or being very specific with their investment. So, that idea that at least half of that business has to be on either the extraction of or the refinement of that metal, I think is an interesting way to think about that. You've mentioned the word copper a few times, and it is one of the metals I want to kind of zero in on today. It seems like the last year or two, it's been doing quite well, and it's been going quite well for a while here, but it seems to really be hitting the headlines a lot right now. If you don't mind going into that a bit, what's really driving the copper market?
Yeah, absolutely. So there's multiple factors descending on copper, all tailwinds at the same time that is driving it to all-time highs. Most notably, there were some major supply disruptions with the Grasberg mine and the Kamoa-Kakula mine in the DRC. Those two disruptions have kind of thrust the market into a supply deficit where demand is greater than supply, faster than was anticipated by the market. So that was kind of at least one key catalyst that went, okay, now there's not enough copper within the space. The industry also generally has this thing called inventories where they can actually deal with the short-term supply-demand imbalances by drawing down on inventories. But inventories have already been declining over the past few years to strategic lows, and the amount of unencumbered inventories has shrunk to a point where the copper price couldn't handle it anymore. Like, for example, potential tariff threats with the US. So that's kind of brought a lot of material of copper into the US that's no longer available to the rest of the world. And so when you have this situation where all of a sudden supply is much lower than you thought it was going to be relative to the copper market's expectations. You have tight inventories, and then you have the strategic demand. And what I mean by strategic demand is, like you said, a lot of people think of copper as this Dr. Copper gauge of the general economy, but it's being increasingly used in strategic sectors of the economy, like AI, data centers, defense, especially as defense budgets are increasing across the world, and especially in electricity grids, both their modernization and upgrading them. So there's a lot of factors coming down all at once in the copper market that's kind of converging to this upswing.
I think you mentioned something that's worth sort of repeating, this whole idea of copper has traditionally been viewed as a bellwether of the strength or weakness of an economy. If I heard you right, it's kind of going beyond that, right? So it doesn't really matter if the economy is shrinking or growing in the short term. The long term is we're electrifying the globe. We need more copper, period. We can't move forward without it, regardless of what's happening in the short term economic cycle. Is that fair to say? Is that what we're seeing in copper today?
Copper, you're exactly correct. It's doing exactly that. For example, copper is breaking away from iron ore and oil and these other type of commodities that are broader gauges of the economy, where historically they've been very tightly correlated, and now that's broken apart in the past few years. So I think copper has moved towards specifically defense, advanced technologies, and the future of energy. And that's a lot more interesting space to be in, where there's more price inelasticity, where they don't necessarily respond to price increases by having to reduce their demand, where they're going to continue to spend more and more on copper.
One of the things I've read about copper is you can recycle it over and over and over again, and it doesn't lose any of its connectivity. Why isn't scrap or recycling sort of stepping up and filling that gap? What's going on there?
Copper recycling is about just less than 20%, let's say, of the overall copper supply. And there has been an increasing role for recycled copper, or people call it copper scrap. But at the end of the day, there's been some interesting analysis, for example, by S&P Global, where there's only so much copper, that's not currently in use. You have to wait for it to be out of its economic use and viable to extract and refine. Even if you were to stress test that assumption to 25-30% of overall copper supply, the problem is that these strategic demand sectors are increasing the demand so much that is not nearly enough copper to fill the supply deficit. We're in a situation where in 2025, we've been thrust into a supply deficit, and that deficit is forecasted to escalate or increase in size as the years go on. So even though copper scrap, I would say to people it's going to play some role, and an increasing role for sure within the copper overall supply chain, it definitely is not going to be able to plug the gap. We're going to need more mined copper at the end of the day to meet these demands.
And speaking of mines, what is the health of that industry right now? I mean, I've also heard that kind of the easy stuff has been largely had, and we're having to go to more exotic jurisdictions, maybe riskier jurisdictions, that kind of thing. What is the state of that? What's that look like? What does the inventories look like in the current mines that are in production right now?
Profitability of copper, we're hitting all-time highs, currently around $13,000 per metric ton. And the profitability at that level is extreme. I think somewhere in the 90th percentile of all copper mines are all profitable. So that's saying, unless you're maybe in the top 1% of mines in terms of cost, which there's probably some sort of strategic reason that's being operated, you're profitable. And the profitability is extreme. You're talking 45% AISC margins, or, even larger on average. The question then is, why aren't more copper mines being developed? One, I would say it's a very lengthy process, and these commodities have been subject to boom bust cycles in the past, where the miners don't want to outlay billions of dollars in capital expenditures unless they're certain that there's enough premium and that premium stays constant. It's not fluctuating too much. We've only been recently hitting these all-time highs. So I think at the current level, existing copper miners extremely profitable, but at the same time, to bring on that next level of production that we need to incentivize now, given the long lead times, we still need higher copper prices to come.
So if someone's looking to invest then in copper today, we understand this. I understand the supply demand side of it. I understand the inventory side of it. What are some of the risks? What could go wrong if I decide to put money in today? What should I be paying attention to in the broader markets?
There's so many tailwinds right now, and we've moved very significantly over the past year. So there's always this opportunity for commodities to trade with convexity and then consolidate. And what I mean by that is that they typically rise very quickly, and then they may chop and trade up and down for a while. So I think as long as investors have a long-term investment horizon and are aware of the fundamentals that we've been discussing, I think trying to trade the market it is a lot more difficult. I think more and more investors, as we talk to them, are seeing this as a strategic investment for the long term, whether that be copper or copper miners or critical materials in general.
I think you make a good point of knowing why you're going into it, sticking to your knitting, and managing that weight or that percent in your portfolio. You and Paul Wong, you guys just crafted a great letter at the end of the year, kind of the top 10 themes to look out for, and talked about catalysts and stuff. Maybe reference that letter a bit. What did you write about as relates to copper in that letter that people should be Not sure if they want to say the word excited to read it, but interested in reading it to learn more about what's going on in the space. What are some of the things you'd have them think about?
I think one of the biggest things right now is deglobalization and rising geopolitical risk. One thing that we can agree on in today's world is that there has been rising risk and rising tensions geopolitically across the world. And what that means for metals markets is that there is a problem. And that problem is that China controls so much of the supply chains. And because of that, Chinese control and now weakening relations amongst the Western allies, you're going to see a lot of strategic investment in these commodities so that they can have their own supply chains. They can have their own security of supply. I think we've seen a lot of security of supply within the energy sector, for example, where we've seen these nuclear tailwinds with a lot of people wanting that. They're trying to wean themselves off Russia, all these sorts of things. And now administrations around the world are really trying to make investments. Like, for example, the Trump administration took an equity stake within a copper miners. We're still talking about copper. They also did with lithium, which I'm sure we'll talk about later. They're talking about stockpiling. That's both in the U.S. and that's in China. The governments are going to be stockpiling and creating a reserve of critical minerals. They're talking about potential price floors, all of these sorts of things. And so as the world deglobalizes and these risks increase, the strategic bid for any critical mineral, including copper and lithium, increases. So it's no longer necessarily even just about incentive pricing, where, obviously for copper, you're in a supply deficit. Economics say that the price we believe should go higher, but it's more than that. It's that this is now strategic for national security. They need to make sure that they have enough copper or rare earths for their defense applications, for their energy, and all of these sorts of technology.
A few things are hotter right now than lithium. I was looking at the price movement just year to date, but also for the last 12 months or so. And lithium has seemed to catch the attention of a lot of investors again. And it wasn't that long ago it was selling off. Let's talk about that. What changed in the last, call it 12 months or so, for the price to stop dropping and then go up as much as it has? What has been some of the general fundamental changes that we've seen in the lithium market in, say, the last year and a half?
Yeah, lithium's really moving into a new phase where the market was trading on a simple surplus narrative, and now it's no longer. Demand is broadening. It's increasing more than people thought. It's increasing significantly more than people thought with grid scale energy storage, and the marginal supply is actually coming down. To give some context, the lithium price, it's just coming off an extreme boom bust cycle. In 2020, we were at about $2.50 a pound, and we ran it all the way up to $38. So that's nearly 15 times. Since then, in November 2022, we've come back down and bottomed out in June 2025 at just under $4 a pound. And that level was uneconomical for a lot of the lithium supply chain. It was being unfairly subsidized. Mm-hmm. So now we're finally off this boom bust cycle, trying to find a relative clearing level that we can hope to model future profitability on going forward.
Let's take a step back for just a minute. Most of our listeners know what copper is. Obviously, they've seen it, they've used it, they can visualize it. But lithium might be a little bit different. Let's take a step back and talk about what lithium actually is. How's it, mined, and what are its primary uses out there in the world today?
Sure. So it's a soft, silvery white metal. It's the lightest metal in the world. Its primary application is within lithium-ion batteries. And what makes it so unique is that it has really small lithium ions. It's got the highest electrochemical potential. But basically what that means is that an ion of lithium inside of the battery can very easily pass between the anode and cathode. So, this is enabling higher voltage, faster charging, rechargeability. Basically, it's got these properties that enable the best type of large-scale batteries that we can make.
And then from a mining standpoint, anything unique about mining lithium, or is it largely similar to the mining of, say, gold, silver, copper, where you're basically digging a hole or you're going into an open pit versus a closed mine? Anything over and above that, or is it pretty much the same type of process, just pulling something different out of the ground?
Yeah, so there's multiple types of lithium mining. I mean, one is more similar, where you've got lithium spodumene in Australia and other places, but Australia is the world's largest producer of lithium. And you also have lithium brines, but you could think of that as a giant pool where the miner is actually just extracting lithium from this giant pool in a desert, Chile being the largest producer of lithium brine. So you have this deposit of lithium where it is very unlike gold and silver mining, and unique to the lithium space.
Outside of electric vehicles, what other uses is lithium being applied to then? We're probably going to have gasoline powered cars for the next, 5, 6 decades in some way, shape, or form. So, how else is lithium being consumed outside of battery technology for EVs?
A lot of what's been going on in the energy sector lately is that they've realized that they need a lot more reliable energy. And there's a couple ways you can do that. Nuclear power has definitely been one of the
Hmm.
primary benefactors. But another way is to offset your intermittency of a lot of these renewables that have been deployed. You could store that energy and then use it later for peak times when you need it. There's been more power demands, whether that be from AI and data centers or the reshoring of manufacturing as the US tries to make it a manufacturing powerhouse again. A lot of these factors could be helped with the addition of large scale energy storage. Storage demand actually grew by 44% in 2025. Storage is about a quarter of total global battery demand. It's really emerging as the fastest growing pillar and is becoming the swing factor for lithium relative to electric vehicles.
I know you mentioned Australia and Chile. Those are really the two primary sources of lithium, largely in the world that we're finding today.
Yeah, absolutely. We're also talking probably about refined lithium as well. It would be remiss also not to say China. And this is a key development of what's kind of ignited the space recently is China was producing lithium from, instead of spodumene, lepidolite, which is basically lower grade. And it basically was very uneconomical when the lithium price was so low. But you had these vertically integrated players that were subsidizing that. And now China's come out with this anti-involution campaign, which is basically saying they don't want to dump lithium at uneconomical prices anymore. So because of that, and they've also been doing an environmental crackdown. We've seen mining permits canceled. We've seen one of Cattle's, which Cattle's the largest lithium-ion battery manufacturer in the world, mines close in August of 2025. That's kind of helped ignite the lithium space, where you're going from the story of supply surplus to now the peak surplus is behind us, and we're inching more and more towards deficits as the years to come.
We've talked a lot about copper and lithium. You mentioned briefly uranium. Is there any other metals out there right now that have your attention that might be interesting from an investment point of view?
Absolutely, I think one stands out in particular, and that's rare earths. Rare earths are a group of 17 elements commonly found together, but the way in which these materials are used is that you would not have that functionality without it. You would not have
Hmm.
important defense systems. You would not have chips. You would not have all of these sorts of things that are really dependent on these critical minerals, even very small quantities of them. And because they are at the forefront of national security, and because that China in particular for rare earths, because of their geology, happen to dominate the market both in terms of mining but especially in terms of refining, all of a sudden you're seeing a lot of attention on these rare earths.
For our investors, we hear the term rare earths. Can you name a couple? What you said, there's 17 elements out there. What are some of the ones that people might be familiar with from a name standpoint? Because rare earth sort of seems like it's just blanketed this kind of mystical basket of metals. What are some of the rare earths out there?
Well, there's scandium, there's yttrium, there's four that are commonly used within magnets and that are especially using those applications that I was talking about. Their chemical symbols are Nd and Pr. There's terbium, and then there's another one that's chemical symbol is Dy.
How would you guide an investor? How would you have an investor think about this space if they're looking to allocate some capital to it within their portfolio? What should that look like? How should they think about it?
In terms of lithium and rare earths, for example, there's really not physical commodity that you could actually invest in. There's no product that would exist. So what you're really talking about is the miners of these sorts
Hmm.
of things. And at the end of the day, they are equities. So we would treat them as such, although they have strategic tailwinds to them that definitely make them have a lower correlation to the overall market. With copper, you have the option of copper miners and physical copper. So physical copper, would have obviously less volatility and a different risk return profile.
And would the miners be viewed kind of more as a opportunistic risk on kind of allocation? And then the other metals, the physical metals, would they be similar to like gold from a performance pattern standpoint? Would they all be considered kind of more diversification risk off allocations, or is it kind of go metal by metal?
Yeah, I think it definitely goes metal by metal. I mean,
Hmm.
there's definitely for sure diversification benefits of the physical commodities. For example, if we talk about uranium, it is generally insulated from a lot of these other financial market stressors where, it's not very financialized or collateralized. And what that just means for investors is that in a large market sell off, there's not a lot of market participants that are going to be seeking liquidity. Whereas, for example, in the silver market, there would be.
If someone wants to kind of dive deeper into this, learn more about not just, the metals you're talking about, but also you and kind of the material you're producing, where's the best way to kind of find your work and keep track of what you're doing?
Absolutely. So on our website, sprott.com, there's the insights page. I write a monthly uranium and copper commentary that you can find there. There's also a lot of other experts here at Sprott that do a lot of different types of commentary or produce reports that you can find on gold, silver, all these sorts of things that we've been talking about. And then I would also encourage investors to check out sprottetfs.com for additional content.
Is there anything you were hoping to talk about today that I didn't bring up that you thought the listeners may benefit from?
I think at the end of the day, we're kind of entering into, like you said, a new world era. I think that there's the potential for a commodity super cycle. Now, I say that with a grain of salt. Like, I think it's going to be certain metals that are strategic to specific sectors. And so that, by definition, is critical materials and precious metals as well. I think that these metals in particular are set for all the reasons that we've been talking about to do really well over the next 10 years.
Well, Jake, I just want to thank you for carving out some time this afternoon to talk with me, and thank you for joining me on Sprott Radio.
Thank you, Ed.
Once again, my name's Ed Coyne, and thank you for listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part, or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.